My name's Janice, and I'm a volunteer now. So there is life after a long-term recovery team. But I loved Carly's words this morning when she talked about bravery, because there's days when we're fearless and we're out there, putting the best foot forward, showing our community how brave they can be too. When a lot of times it feels a lot like insanity, and that we're just banging our heads up against the wall. So from now on, you know that you're brave, you're not insane. So we're here to talk about auditing. And so transparency, you hear it all the time, but basically you want to know to protect your organization and learn to talk to your auditors, because what this really then does is helps you with your funders and help them understand what you're doing with your money, showing responsibility. I have GuideStar on here. That's kind of like the nonprofit manager to make sure that, if you have GuideStar credentials, then you know that you're doing a good job and that you're not going to have any trouble proving to funders that you are taking care of the money that has been bestowed to you. Anything to add? So here's just a quick definition of what that is. And basically some of these notes come straight from a presentation that the auditors shared with us, that they share with some of their nonprofits, and we just kind of incorporated our own notes into it. So here's what the auditors say the board responsibilities are. They want you to make sure you use, and it's kind of common sense stuff, but it doesn't hurt to help. It doesn't hurt to hear it again. So you're going to be monitoring and taking care of donor funds. And part of that is just making sure that you have the proper internal controls. So, when money's coming in, you want to make sure that you're documenting where the money's coming from, which category it falls into, because one of the things that we got dinged for was intaking client funds, because we also used client funds, like some of their FEMA money, to help rebuild their homes. We wanted them to have buy-in, and so we would match that. But it's not technically revenue, although at some points we called it revenue, and it's really just an offset to your construction expenses. So having a bookkeeper or CPA on your board helping you guide some of those things is very, very helpful. I knew revenue and expenditures, and that's carried us for a long way until we got to the auditor, of course, and then I learned more about expenditures and revenues and how to document it properly. Go ahead.
Excuse me. I'd like to say, just in terms of the donors and grants, one of the things that we learned as a nonprofit 501c3, you have to be really particular not to have funds that are allocated to an individual. Those funds need to be allocated to a type of individual or a group, or they can have parameters around them, but they cannot be for, I can't say this money is for Jeff Kohler in a nonprofit, or you're breaking the law, at least in Washington State. I don't know Texas nonprofit necessarily, but that is something that we had to be very clear about. Like Red Cross wanted to give us a grant and monies for the rest of the people they did not serve in our county, all right? And so we had to be very diligent about how we set up their parameters so that we didn't get ourselves in trouble when we accepted those funds. So
I think at some point we allowed gifts sometimes we had individuals that wanted to give to somebody else's recovery. So we did allow gifts, but they did not get receipts from us for donating to a nonprofit, because it wasn't truly going into our fund. It was just, we were just putting it towards construction expenses. So that's kind of the way we worked around that. Auditor's main concerns: segregation of duties and monitoring the money. So, you've kind of heard that over a couple of times about monitoring the money, but basically having, if you have your mission statement and you're guided by that mission statement to take care of this thing and what your purpose is in your organization, same goes true for the monitoring of your funds. It's kind of like your mission statement. So you're setting up those controls. These are the parameters of how we're going to manage our money, what we're using it for. Same kind of principle. And so you want to stay true to those guidelines. But I want to talk a little bit more about segregation of duties, because this was something that kind of came up and we had to learn from, because we were such a small organization, and you guys will be too initially. just making sure that you have those natural checks and balances. When I sat down with the auditor the first time, they were like, well, Janice, who goes and gets the mail? I do. Who opens the mail? I do. Who makes the deposit? I do. Who writes the checks? I do. And they were like, okay, no more. And so we had to kind of put some checks and balances in place so that we could monitor and make sure that different sets of eyes were looking at the same pieces of paper, and that we were documenting them properly, and that I wasn't like putting checks in my pocket and putting them in my account. But on that same note, as board members, it behooves you to really pay attention to your financial statements, including bank statements, to make sure that you're watching where that money's coming in from and where it's going out to. Don't be afraid to ask questions of the people that are working for you. And one more thing that I lost, but anyway, so just we'll talk a little bit more about recording and reporting and authorizations. So this is just what they're saying. There's some suggestions for how you might separate those duties. Oh, this one's kind of long. So basically I'm glad this is all going to be in your packet and y'all can review this later. But basically, just making sure that you're getting those invoices, you're initialing and dating them, whoever's receiving them. When they get paid, they want them stamped paid. They want a general ledger account assigned to them. So you need a statement of general ledger accounts that you're using. When you're paying bills, if you're paying from a copy, make sure that they know it's a copy. And these are things that the auditors, when they come in and they ask for, address number, whatever, and they open that file, these are all the things that they want to see in there. And for me, I thought I was doing such a great job. I double filed everything. I had all my original invoices in by vendor, but I had a copy for every homeowner file. And so I had a lot of duplication of stuff, and I still missed stuff. I mean, as much of a taskmaster as I was on receipts, I didn't have 100% of them. And I didn't have 100% of my W-9s. I collected them for individuals, but I didn't realize I needed them also for 100% of my vendors. And so I had to go back and get some of those things at tax time to make sure. And it's a lot easier to track them down when they're waiting for payment. Once you've been paid, it's a lot harder to find them.
And with that, I just want to say, I just dealt with this just the other day. Only pay partial. On those big ticket items, for a well driller, for instance, put the whatever they want down. Don't pay the whole entire amount, or 6 months later, you're still waiting on that well driller.
Absolutely. We have, we live in a county with septic systems, so we definitely did that. And the same with AC systems. And one thing we did, I don't know if it's on here, one thing we did was we set up individual property accounts at Lowe's and McCoy's for materials. And so we tracked invoices that way too. And so we had itemization of each house and exactly what expenses we spent there. But we also had other things, the air conditioning, maybe some dumpster stuff, plumbing parts, or something else that might not have been at Lowe's and McCoy's. So we had to track it that way too. And there were a couple of instances when we had a new person at Lowe's who filled out the paperwork incorrectly when we set up the accounts, and the refunds went back to the homeowners, which never actually made it back into our long-term recovery team. So we lost 2 that way, and so we got in trouble for that one too. Again, this is just some information about signing the checks, making sure that you have that due diligence, and this is really with your treasurer or board member, however that falls out for you guys, for your organization. We have a 2-check signature. The bank tried to tell us they can only see 1 check, but it felt better for us to have the 2 checks, so we still require 2 signatures, even for payroll, anything. One thing that auditors really caution about is payroll. They, through their years of experience, they say that's where the most embezzlement and money disappears, is through payroll. So they pay particular attention to it, and they ask that you do too, which is part of what this is. Pay attention to your monthly financial statements. Understand your profit and loss statement. What does that look like? What do those numbers mean? Who are those people that are on it? Understand what your balance sheet is. And make sure your check register looks right. You don't have duplicate checks in there. You're not missing checks. I mean, if you are, ask questions.
How many of you in this room can actually visually see your last P&L or your last report that you overlooked or oversaw? I'm just curious. Okay. So it is really important. I am not, that finances is probably the farthest thing I like to do. It's not what I enjoy at all. But it is absolutely crucial in this group for you to move forward and to get funds and to have people trust and be entrusted with money. And so these are serious things. These are the things that keep me up at night.
And it's just by show of hands, who does have somebody that monitors their money this way in their organization? Great. And are they bookkeepers? Or are they just people in your group? Okay, great.
CPAs.
In our community, when we first started, there were several CPAs and bookkeepers approached right after the 2/11 fire, and none of them was willing to take on the responsibility for whatever reason. So I actually was recruited by my FEMA worker to be the treasurer on the board, and then kind of by default inherited the rest of it. But so you never know where you're going to find the person that's going to serve on your board, and really have the heart and the passion to stick it out. Because never would have thought I was that person. That didn't show. This is just talking about oh, go ahead. There's questions. Kate, are you miking? On this one, it's just saying that more and more online, the funders are starting to look and do their due diligence and pay attention to who is, a registered nonprofit with GuideStar and some other groups. So this is just an introduction into that.
How many of you have Googled yourself online? Yeah. It's interesting to find out what your group is being said, what's being shown on the internet about your groups and things. So if you haven't done that, feel free to do that. Go back and take a break and take a look at that.
Go ahead.
Who was talking?
I was wondering, we had a discussion the other day about indirect costs. Did you ever do that as far as, say, per job, the indirect costs or X amount, to do a study to see if it was 12% or 20% or whatever, so that...
Are you talking about in-kind services?
No, indirect costs. I know in government arenas you have built-in indirect costs, and in nonprofit you probably do as well, but I didn't know if... So that your admin cost ends up not being, over 10 or 12%.
You're talking administration costs.
Yes.
That's what you're talking.
We did that. Ours was always, I want to say 6-7%. We really tried to keep it well below the 10% mark.
But did you have to do a study for your indirect costs, or you just say each job?
How many hours?
I'm going to say no, we didn't. We never did a study. We just ran the numbers.
Okay, but the auditor's fine with that?
As far as I remember. I mean, they probably looked at that, but they didn't really question us on it because I think it was pretty obvious in our numbers. And when we showed them the volunteer hours that we had and the numbers that we presented, paid versus construction, it was pretty apparent on our paperwork. So I don't remember them questioning them on it.
And I just want to say for us, we fundraise completely separately for our administrative costs. Those were 100% donations or grants that were funded, and so that infrastructure was separated from, because we wanted to keep our survivor donors 100% pure.
But we did the same.
I'm Earl from Blanco, Regional Recovery Team. I can't stress strongly enough having somebody on the board that's either a CPA or some kind of accountant that can watch that profit and loss, because as board members, that's going to be your roadmap. We lost almost a year of work because we made assumptions that work was being done. We really didn't have a CPA who would look at those numbers. And when we did have a CPA that came on board and he began to run numbers, we found out just how far behind we actually were in construction. So if you're a board member and you don't have that, I suggest that you find somebody that can at least go through your profit and loss sheet and say, this is what we see that's going on, and then you will know kind of for yourself, oh gosh, we should be here, why aren't we, running out more projects or something. So I can't stress strongly enough how important it is for a board to see the profit and loss sheet and at least have some understanding that, we've got money going out for this project, we've got money going out for that project. And ours were listed by individual projects. So every case had a case number. We knew what money was being spent on it, but it did take us a year to reach that. And we lost a lot of time.
And I'll just add on to that. Part of what we do and encourage our board members to do is engage in these families. So even though we start out with a case number and address, at some point our board members are having dinner with the volunteers. They're sometimes invited to take lunch out to a work site and actually see what's going on. We don't ask them to pick up a hammer, but we do want them to understand really what it takes to rebuild these homes in our community and to engage with their neighbors. It's their neighbors. It's not the volunteers' neighbors, it's their neighbors. So back to GuideStar. Here's the GuideStar. Basically what it is it's a website where you list your nonprofit. And these are the things that they want to make sure that you're putting out there so that they can hold you accountable to and that you can hold yourself accountable to. Your mission statement, your program information, your board list, your staff list, your designation letter from the IRS, your annual report, and your audited financial statement. And I'll just take a moment here. Sometimes your organization may not feel big enough or that you have enough money to do a full audit. So an audit review is perfectly acceptable to do in years. We've done a combination of both. When we were running, $1.5 million, $2 million through our organization, we were doing full audits. One of the things that I will caution you might get, cautioned on from your auditor is if you're exceeding the FDIC protection from the bank with your funds, they're going to ask you to diversify and get you some more bank accounts. Because, different bank institutions, because it's not how many per account, it's per bank. In addition, here's some other things you might do. Regular updates with your current, bookkeeping, detailed program, evaluation. If you have homeowners who are willing to let you take pictures, we do home dedications. Those kind of things you can keep on your website. And those are always nice to show, what's going on in your community and how much you're doing your recovery. It's also stuff that your chamber can do, your Economic Development Corporation. Other entities in your community may rely on some of this information to help promote the recovery in your community. Also just, board members, key staff, annual reports, every year in 990. And again, the audited financial statements, and then of course, the good letter from the IRS, and then again, your 501 status, 501c3, sorry. We're kind of in, but it's a lot of numbers, but it's kind of pretty cut and dry for what you do. And receipts are the big part, having a CPA or an adequate bookkeeper, keeping a general ledger so that you know where to properly allocate that stuff. It gets pretty confusing sometimes when you're working with, 20, 30, 40, 50 homes at a time, and you're running 4 or 5 different volunteer groups, like good groups, MDS, UMCOR, whoever the groups are for you. There's a lot of numbers coming through. There's a lot of receipts coming through. I had a great relationship with my MDS staff. As a matter of fact, the bookkeeping sheet I use, the ledger, is actually a MDS created sheet. And so if you call me and ask me for a copy of that sheet, I'm just sending you MDS's sheet. They use it a lot more thoroughly than we do because they break it out. This is how much we spent for lumber. This is how much we spent for screws. This is how much we spent for plumbing parts. I just needed the big numbers. I had the receipts to back up the rest of it. Who else has questions?
No questions. I
Okay.
just wanted to add, Janice hit on a point about working with your bookkeeper and just, again, being empowered to let the bookkeeper know what you need. Sometimes they'll feel like the general line items, you should be able to put things where they've already got set up. If that doesn't fit your organization and you feel like you need more line items, You tell them to add more line items so that it'll fit. Because those questions will come from your board. If your board is really looking at your reports, those questions will come and they'll ask you, okay, so why is this amount here? How come it's not here? We actually had a situation where the bookkeeper put money where it was for corporate when it really should have been for grants. It's just a matter of paying attention to where they're putting it and where you need it to be so that it works for your organization.
I just want to add a couple of kind of common things having to do with the transparency. Transparency and trust go hand in hand. And the way that you present yourself and present your fiscal pieces are about trust. And with that, you have to understand that you're going to be asked these questions again and again and again. And I want to encourage you to maintain your social veneer. When you get asked those same questions over and over and over again, 80% of all of our body language and communication is with that body language. And so if you are being irritated by being asked these same questions again and again, you're making a mistake. Because this is how you're going to get funded. This is how you're going to recover your communities. And so be prepared for that repeated ask, the repeated questions, the repeated reporting. Those pieces are critical to what you're doing. And so, again, maintain that social veneer. It's easy to get irritated with a little bit of tone or a little bit of something, you know. So,
Go ahead.
any other questions?
Yeah, I'm Chuck. I'm with the Bastrop long-term, and I'll second that because I'm one of the board members that used to always ask questions and say, why is this project more? Where'd this cost come from? And it was because I didn't want anybody from the community to come in and say, what's going on here? I mean, your costs have come up, gone down, and it worked out, you know, like Janice said, we had to work through it, but now I feel very comfortable. I don't have any problem with how we're doing our business.
Well, because sometimes when you're building a 2-bedroom house, on paper, you know, that's a $23,000 donation, but when you're building a 3-bedroom house, maybe that's a $32,000 donation, you know, conglomerate. If you're a board member, I mean, you're questioning why that's a different number. You don't understand that it's a 2-bedroom versus a 3-bedroom because you may not be that involved in the business. So those are legitimate questions.
I believe when people ask, it's a gift. It's an opportunity for you to give your story, your fiscal story, your needs, your whatever it is. One of those situations happened for us in Eastern Washington after the 2015 fires. I had someone call up. He'd been a $1,000 donor on our first fires. And he said, I'm interested in my wife and I doing a little bit more. Can you tell us what you are doing and those transparency pieces? He went through those questions. I went through and answered those. It was about a 7-minute conversation. He says, I'm going to talk to my wife. I'll give you a call back and let you know what we'd like to do. Part of that story was that we were $275,000 shy for our phase 2 rebuild. He called back 2 minutes later and said, I'll have a check to you for $275,000 in 2 days. I saw that in 2 days. So don't be afraid. Don't be afraid of the fiscal asks, but you've got to know what you're doing. Do those pieces because then you can present your story in truth.
Okay, I'll follow it up then. So, our 3rd year of after the fire, we were kind of down to our last 6 or 7 projects. We were running pretty darn low on money. And
We were out of money.
and American Red Cross decided they wanted to come by and visit with us, and of course we welcomed them. And they asked how we were doing in our recovery, and we kind of told them. And then they said, well, how many people do you think are out there? And it was like 30 families. Really? How much is it going to cost to repair? $50,000. So that's $1.5 million, right? And she's like, why don't you write up a grant proposal? Cool. And about 30 days later, maybe 45, we were in the middle of our second fundraiser, ready to, beg, borrow, and steal from our good neighbors. And we got to announce that we had 1.5 million. And although we would still welcome their donations, they didn't have to open their wallets quite as wide this time. But it was really a wonderful blessing. And you just never know who is watching you and what's happening in your community. You can be far along in your recovery and think that you're done. You are not. Thank you. Anybody have any more questions? Thanks.